Hello guys, welcome to this YouTube video.
Today, I'm going to run through Eurojpy, and that's going to run through EURUSD.
So let's get into it.
Right, guys, I'm starting off with Eurojpy. We're on the monthly chart right now. Just going to draw in some monthly key levels and patterns in order to zoom in on the lower time frames and pinpoint an entry. So looking back in 2012, we did have this falling wedge pattern, which broke impulsively to the upside. And ever since then, we've been correcting in this pennant. As you can see, we are squeezing in, just connecting the highs and lows together. So yeah, that's really all on the monthly chart. We also have our psychological level across here at 1.27, where as you can see on the monthly chart, we had this bearish engulfing candle to the downside, rejecting this area within the market. As you can see, looking back on history, it's been a significant level. On the weekly chart now, we can start drawing in some trends and some support and resistance levels. There's a nice level across here, I can see at 122.5. And we also have a trend line here where we've been moving upwards in the uptrend, and we can draw that in as well, which fits in nicely here. As you can see recently, we have broke it impulsively to the downside. However, this is still not enough because we're finding trouble at this weekly level across here. As you can see here, we also had a false breakout where price tried to break up, closed back down, formed a higher low, and then continued to the upside. Right. On the weekly chart now, we can see a bit more depth, what's happened. So we also have a nice level in across here where price is holding as well. Across here. And so right now we're just looking at the structure. Where can we take this trade? So now on 4 hour, so this is daily, we can start to look, well, what can price actually do? What's the probable scenario here? So as you can see, we have this trend line coming down here. And we also just formed this low in the market here. So we can draw our corrective, our counter trend up to this level. Style, let me do that. It's a dotted line. Right, so we've got this type of formation forming where we have our possible downtrend, and which we are correcting and back up into this region as well, again, to then look to potentially take it to the downside. For our chart, we can see this more clearly with this morning start of this trend line, and also we've also was consolidating within this area here. You can see we was ranging, we had that false breakup to the downside, and then we impulse to the upside. So right now we are still, if I can draw a trend line coming in, because we're still holding this level nicely, as you can see here, and which means we are still holding, we're still trading above this level. So what we would need to see in order to take a position on this pair is we would like to see price to come back up a little bit more and retest this type of area in the market across here on this trend line. In order to do that, we'll have a nice retest of this resistance across here. And then what we'll be looking for is an impulse to the downside, breaking this corrective structure, breaking this corrective counter trend coming up here, and retest some sort of level in the market across here. And once that happens, once that plays out, we can then look for shorts down here and back to our psychological level at 1,225. And that'd be a nice trade using the 4 hour and 1 hour. We'll be using the 1 hour for entry in order to take a sell position on this pair.
Right guys, so this is EURUSD starting on the monthly chart, doing our top-down analysis. Now on the monthly chart, what we like to do is get an idea of the structure of the market. So taking into consideration the highs and the lows, just to understand where the market is heading in the longer term. So quite clearly to me, I can see that the market is downtrending, forming lower lows and lower highs. And I can also see how we can also form this kind of trend in the market, this bearish trend line here. And we can see that most recently, we have actually started to reject it, forming this bearish candle off of this trend line. And I can also start to copy and paste this trend line and potentially draw in a kind of channel like that, which we are potentially trading in the market. Now, also on the monthly chart, what we like to do is draw in our psychological levels. Now, psychological levels are rounded numbers such as 1.30, 1.250, where it's an area of sensitivity in the market where price has been using it as either support or resistance. And in terms of this market, I do see a psychological level at 1.220. So if I just type that in now, something along there. And as I can see previously, we have been using it as resistance, using it as support, support here, forming this wick, and then here again. And now we finally come to this level again. And as I go down on the lower time frames, you'll be able to see how price actually reacted at this level. So yeah, that's the monthly chart. We'll drop it down to the weekly. And the key thing to take into consideration on the weekly chart now is how a price actually reacted once we reached this psychological level at 1.2. As you can see, we were making these impulses, and then as we impulse towards 1.2, you can see for a very long period of time, quite a few weeks, we were forming a lot of indecisive weeks. That is shown by the doji candles, because doji candles actually show indecision in the market. And what I believe this just is buyers had their positions in the market trading up to 1.2, and a lot of people were taking their profits at this level. That's why there's not much movement going on in the market. But 2 weeks ago, we did have this bearish engulfing candle here, which actually gave us our directional bias, which actually gave us that push we needed to begin trading, to begin actually taking our trading positions. So that gave us our kind of sell bias in the market. And then last week just ended as a kind of weak bullish candle, kind of rejecting the upside again. As you can see, it left the wick, and on the lower time frames, what you'll see is what we've actually done is we've just rejected structure on the lower time frames. So that's just the weekly time frame. So let's drop down now to the daily. So on the daily time frame, you can just kind of see those weekly dojis a lot more clearly, how we were forming this kind of range in market. You could say we were forming like higher highs and higher lows, but they are kind of equal in the length of the impulses and corrections. So it's kind of clear that we can say that price is actually ranging. Now, in terms of a level, I do see this kind of zone across here. Now, what price actually did when we had that impulsive candle, as you saw on the weekly, that bearish engulfing, what that was doing was actually engulfing away from this zone in the market. Because as you can see as well, once we did actually touch 1.2, we did start to form lower lows and lower highs on the daily time frame. So we can start to say that we are now in bearish market structure on the daily time frame. So I can actually start to draw in a bearish trend line, something like this. And as you can see, using our Elliott wave pattern, we can start to predict potentially this is the 1, this is the 2, this is the 3, and this pullback that we've currently made last week is the 4th wave, and we are looking to trade the 5th and final wave to the downside. So that's using Elliott wave theory just to understand the structure of the market and start to predict where we could be heading. I could also use a Fibonacci tool to understand the pullbacks in the market. So if I just draw it from our swing high around here to our swing low, we can potentially say that we have pulled back to 0.618, which is known as the golden zone level in the market. So we could start to say that price is ready to make its 5th and final wave to the downside. Also, just taking a look at a daily candle. So the way we impulsed away, as you can see, strong bearish candles, and then the way we started to pull back now, this is of course a strong bullish candle, so that's just making our pullback. But as you can see, over the last 3 days from last week, we have these smaller candles. So we could potentially say that price is slowing down, ready to make that momentum shift to the downside. So let's drop it down a time frame onto the 4-hour. So this is where we start to see a lot more clearly this level in the market here. So as you can see, we were using it as support all across here. I won't draw them all in, but you can kind of just see, and then we've actually used it again on this level over here. I'll just use that. So yeah, you can see that we've come to use this support level as resistance now, and you can see we've started to slow down at this level. And also what I'd like to take into consideration on the 4-hour is the structure in the way we're pulling back. As you can see, we're actually pulling back in bullish market structure. We made our impulse and we made a correction, but then we failed to make an impulse. Now, just because we failed to make an impulse does not mean we should be selling. We would like to see this 4-hour bullish market structure broken. And as you can see, this level in the market we have actually used as resistance. So I could draw a zone across here like this. As you can see, we used it as resistance, we broke above and used it as support. So for me to actually start considering sell positions, I'd need to see this level in the market broken. So let's drop down now to the 1-hour time frame where we'll be able to see this pullback in a lot more detail. As you can see, we were making lower lows and lower highs on the impulse away, and now on the pullback, we were making these higher highs and higher lows. I could draw a trend line just to understand the direction. If I could just draw it from here, we can see that we have actually broken out of this trend line, and we have potentially already started to show evidence of bearish market structure, because we've broken out of the trend line and we've potentially started to form a lower high in the market. So this is just our initial evidence that the market is going to start making downside movement. But what I'd like to see as extra confirmation is for price to make a lower low in the market. And then what I could then start to draw in is a bearish trend, something like that, as evidence. And then once you've made that lower low in the market, I will look for price to pull back, show a shift in momentum around here as evidence that this is a new lower high. And then we can look to trade and enter our trades around this position to catch the impulse to the downside. So that's something I will be looking for next week on Euro USD. We may even, if I can just draw in, price might not impulse to the downside straight away. Price could do anything, but let's see what our options could be. So potentially, as you can see this side, this could be a head and shoulders pattern as well. So price might need to come up a bit more just to make the right shoulder in the market. If I just draw this, so this side being the shoulder, price might need to come back up to this level to make the right shoulder. And then this is our head in the market. So going into next week, this is why we need that extra evidence to the downside, because just because we made a lower low, price still might need to make a lower high before continuing to the downside. So we might see something like this to make our lower high before we come to the downside, but still, this is still our confirmation. And then this is what we are looking for in the market. So that's Euro USD, what I'll be looking for going into next week.